Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Wednesday, and this is the 21st of October, 2020. So here we are, and they're already open in the futures. We're about 6:50 p.m. as I'm doing this, and they're down sharply in an early evening trade. You know, President Trump came out tonight, I want to guess 4:30-ish, something like that, and said that if there's no deal, it's Mr. Schumer and Miss Pelosi, and they don't want to get a deal done. Well, if you're trying to make a deal, why don't you be quiet and see if a deal can get done? That's the first thing. I know he's a great negotiator. I know he's better than I am, but some things just make sense unless just playing politics. Hey, you don't make a deal, I'm telling America it's your fault. That's probably what's going on right here. And that doesn't mean a deal's not going to be made, but early pressure tonight. We also saw the dollar index got hit today. We're seeing that most of the stock indices closed lower, and as I'm telling you, they're again lower on early evening trade. So if we take a look at XLK, and we'll start with the tech sector, you know about the Google lawsuit, blah, blah. You know that Tesla did great today in terms of their numbers. They look pretty impressive. But we see a market here that's filled some gaps and sort of sitting with a downtrend. Why is it a downtrend? Let's define what a downtrend is. Traditionally, we say it is a condition on a chart where the pattern is one of lower highs and lower lows. Now, there's many ways you might measure it. I created a way that is consistent. It is called a swing line. It's set up of 5 rules that are taught in my charting course. And out of those rules, it's looking at a combination of higher high, lower low days, inside days, outside days up, outside days down. Those are the 5. And how it plots that does it each time. So right now, I see a pattern of lower highs and certainly lower lows. What would break the pattern is getting over 120.57. So I define the risk on the swing line of being short to 120.58. Does that make sense to you? I think it should. I then filter it. In order for a short position to be valid, prices have to be trading underneath the 18-day average of closes. You may choose a different moving average. This is America. You can choose whatever you want. I have mine, and I choose the 18-day. And it hasn't done that. So while I have a downtrend, I don't have it validated. They knock each other out. There's nothing going on. What I did have is a market that got up, had hit upper Bollinger Bands. Do you know what a Bollinger Band is? It is an algorithm designed to keep the market trading within it 95% of the time. As such, I believe that the first time you hit it, the smart, quote unquote, smart money, is taking money off the table. They realize the market's not going to stay over that more than 5% of the time. They're not going short. And that doesn't mean they've taken all their positions off. They're going to do money management. That's what I've learned over the years. But I deal with you. You're not sitting there with possibly hundreds of millions to invest. You're trading the markets. You've got your 100 shares of this, your 100 of that, your 50 of whatever. Today you can buy any size you want, commission free in these. So you're trading every size. So you got 100, maybe you're taking 50 off. That's what I'm saying. Then you're moving stops up. I teach all this in my charting course. But in this case, what we entered then with the lower highs, lower lows was a corrective mode. So we have a market that's kept an upside bias that's been in a corrective mode that began back here when the market started this correction. And now the question is, does it want to enter a downtrend mode or flip around? Now, if it were to not take out 118.53 and just flip from here and get over 120.57, believe it or not, it can turn bullish again because you'd have higher lows, higher highs. Haven't done it yet. And just because at this hour the futures are down doesn't mean this will open lower. You know that. This doesn't open till 8:30 a.m. Central Time, 9:30 Eastern. So we're looking at that, and we're looking at momentum. Markets that lose what's called a slow stochastic that is embedded. Let me define the word embedded. I could have called it locked in. I came up with the term with George Lane, who developed slow stochastics. And I presented to him when he was alive my idea on this. I became one of his students right away. I fell in love with slow stochastics, and I was so fortunate to have a TV show. And I met the Robert Prechters, the Granvilles. I mean, I got books here signed by everybody you can imagine. And if you think I didn't probe their minds and ask questions that you can't imagine, you'd be very wrong. Think of me as a sponge. I wanted to learn. And I came up with ideas that changed a little bit as to the formula. What type of numbers are you using? Are they exponential? Are they regular numbers within it? And then I said, George, I'm noticing that when you get both numbers going a certain amount of time, over that number, it's locked in. It'll tip you off if that's broken by the red line slipping back under 80, and if it stays there the day after that occurs, often price will return to the 18-day average of closes. Now, if you knew George, he dressed like he was from the Southwest, full of turquoise, a character. And he'd chew it and go, I think you got something there, Ira. And that was basically it. And I've run with it ever since. But it's all because I knew the man, I was fortunate to know him, and he was a pleasure to talk to. And boom, down it goes. No longer with us, but boy, that was something. And that, I got rid of MACD. I had been a student of that, relative strength. I had been a student of that. I fell in love with this one for many reasons. Marty Zweig was one of the reasons, and Peter Elides. I had gotten to know, I liked what Marty always said. But Peter Elides came up, if you ever know the stock cycles and what they did, and he gave personalities to each cycle. And from that, I started picking up that also happens in stochastics. And I threw that, of course, at Peter. So, you do all these things over time and you learn a little bit. And I'm going, boy, personalities to ABC waves and the other. And yeah, that's what he came up with. It was smart, very smart. So I look at all this. I see how the market is slipping down. I've got the same thing working here. I've lost the embedded reading. How many days? Right here was day one. Day two. As far as I'm concerned, this market is headed to the what number? Back here. Now, if you're wrong, where are you wrong if you take a counter position to get back to that number? I believe you put a stop over the most recent high. Will you sometimes get stopped out? You betcha. Nothing works all the time. So money management's going to be very important. What happened in XLI today? You lost the embedded reading. If you keep it lost tomorrow, I think you're going to the 18-day average. I have a way to decide if it's going to be lost tomorrow when the market opens. I'm not telling you all my secrets here. I tell them in my paid subscriber video. In XLE, trend is down, bias is down, momentum is down. I'm looking for 28.94 to prove that I'm wrong on the trade. The market has to get back over the swing line high of 30.16. Otherwise, the target's right through there. QQQ, I'm looking for the market to hit 283.45. Just missed it so far. Today's low 283.49. Futures, so you'll know tonight, all of them have hit their 18-day averages, so they have met that. Sometimes you don't get exactly there on the QQs and the DIAs and so on. You know why? The futures reopen at 5 o'clock at night and they're trading all the way through to 4 in the afternoon. They could get a huge break, hit all their objectives, and remember, this is based on the futures. The futures aren't based on these ETF products. They're based on the futures. It does its thing, it does a reversal, and you never quite hit it. Build that into your thinking. Very, very important. That's why I create a combo package where people get to see my morning video, my futures one, because I'm talking to the ETF trader in that basically, warning them what has happened. And I then have the ETF video at night because a lot of you like to trade the ETF products rather than the futures. I'm there for y'all, but we got to deal with the time constraints of it. When we take a look at EFA, you've pulled back to the 18-day average. You had just been overbought. The market's got momentum down. The close today was 64.51, which now puts the market with what? You have lower highs, lower lows. It's bearish. The trade, I think, will sell this market at 64.65, and if you get over 65.18, I say, oh, wrong. Don't want to be in that market anymore. Potential support zones. I think they'll see them at 63.66 to 63.38. Now remember, I don't tell you in these tapes ever to buy or sell. I'm not going to do that. I do that in my paid subscriber ones. But I give you an idea what I think the pros might be doing. GLD. Well, you went up today, hit 181.31. What is the upper Bollinger Band? 180.98. What do I teach? First time you hit a Bollinger Band, you take off part of your position. The trend has been up. Momentum's been up. There's a point where you take some money off the table, and that's what I think the pros did. Now I think they've moved their stop and they see if they can get any mileage out of it. We've been talking that on this break, without a trend, because you have a higher high, lower low, will the market find its support between the 100-day average and the 18, and it has. But it hasn't turned the trend up because the pattern of an uptrend has higher lows, higher highs. You don't have that. You have a higher high and a lower low. Momentum has flattened out and bias is up, but it's not showing anything to me yet. In TLT, it's interesting. The bonds and the 10-year notes went to their lower Bollinger Band. So here's one of those examples. I realize you might be playing that you're going to get there, and you might be very right. I would have the horns, radar, out. Maybe I don't have to hang in if I'm bearish for the last penny there. You've already hit the numbers in the futures, and I hate to say it. This is the 20-year plus Treasury. Oh, gee, we trade those in the futures. What do you think this is based on? Cash and that. FXE, you went back up to the upper Bollinger Band. This could probably give up a little bit of that. Why? The dollar probably gets a bid if there's no trade deal. But I said trade, if there's no relief bill in the United States. Just because the market's building in that if there is a relief bill, things are going to get better. A lot of money coming into our economy. We'll be strong enough where we're going to do business with other economies. Everybody does better. Don't get that and set the economy reeling again, could be bad. It'll be short-lived, I think, because regardless of who wins the Congress or the presidency, at the next term, there's going to be spending right away. It's not going to take very long. It's coming out with all forces. Our Fed wants it to happen. The government needs it to happen, and the people of America want it to happen. This is politics preventing it, nothing more than that. I want to remind you what I do. At 4 in the afternoon, typically, I'm recording a subscriber video for my paid ETF subscribers. It's $8.95. I'll tell you exactly what it is for 30 days. Go to Starbucks, buy one of the large coffees, leave a tip here at $8.95. You don't think I look at this? I'm trying to price it in ways that you can relate to, and you go, he's not expensive for this. With that, I say 35. I think I'm up to 37 charts now on spiders and ETFs for you, and I'm constantly adding. I want to get to 40. In addition, on the weekend, I put out a weekly version, just a weekly, with specific buy and sell for the longer term trader, not for the person trying to trade in and out for $1, $2 at a time. Nothing wrong with that. A lot of people do that, and it's great. You watch them, the Jerian brothers. What do you think they're doing? They're looking for those option plays to get their moves one way or the other. Well, this is what this is about. This is that type of thinking. So for 30 days, then it moves to $16, not expensive. I'm putting out, think of how much. Only Sunday don't I do a video. So you're really getting a lot of information. Go to our website to read about it under the word research. I recommend the combo package of both this along with the futures because, as I said, the futures drive this. This doesn't drive the futures. I'm Ira. You have a great day. Talk to you tomorrow.